Happy Monday, everybody. I hope you had a great weekend. Today is September 18th, 2023, and this is your Monday market update. I think I suggested you'd see a quiet week last week, and that's what you got. Mostly, let's recap the day by day, and then we'll put last week's numbers up and talk about the setup for this week. We saw stocks open with a bit of strength on Monday following a few major news outlets writing about the Fed being done with rate hikes. These, of course, included the Fed Whisperer, Tim Rose of the Wall Street Journal. Watch for confirmation from Goldman, which has been the normal actions after the Fed feeds the Journal the information to float and see how the market likes it. Then they've been pushing Goldman information as well. So to give it more legs, we'll just have to see. Regardless, there was also China news that was positive, and we had good company news from Tesla and Qualcomm, up 10% and 4% respectively. Tesla got a big upgrade from Morgan Stanley, target price from $250 to $400. Yes, they are 60% more confident than they were the week before. Overall, the Dow was up 0.25%, S&P up 0.2%, and the Nasdaq was up over 1%. Back to the other side of the boat on Tuesday, the market gave back most of the gains from Monday. Oracle numbers were disappointed, mostly in the place where everyone has been convinced of the latest hotspot, cloud. Guidance on that front was not encouraging. Add in the Apple reveal event, and that was a yawner. But as has been the case so often, Apple sold off. What Apple does, the market does. German eco data and the UK wage growth both came in on the wrong side for the bulls. By the end of the day, the Dow was just barely on the negative side of the flat line. S&P was down 0.5%. The Nasdaq was down a bit over 1%. Wednesday was CPI day, and on every line, full CPI, core CPI, and even super core CPI. Numbers were a bit hot, but for some reason the news did not seem to be bad enough level. There was a lot of talk about the UAW and the deadline that was coming up for the strike. We'll talk about that in a moment. There was little other news. The airwaves and the news wires were busy making nothing of the CPI, talking about PPI coming on Thursday and the UAW. At the end of the day, the Dow was down about 0.25%, S&P up a bit and just a bit, and the Nasdaq was up 0.25%. The bulls woke up a bit on Thursday and started with the ECB dovish hike, and then a lot of U.S. eco data came in, jobless claims, PPI, and retail sales, and all pretty much seen as Goldilocks. Add in the IPO market popping again with the biggest in a while. ARM, the semi company out of England, partially owned by SoftBank in China, popped 25% on the open. But as much as everyone was excited about that, since the IPO market has been so slow, 25% for a majorly anticipated IPO, not so much. The Dow was up about 1%. S&P and the Nasdaq both up a bit over 0.75%. Before I give the wrap up for the week, the U.S. dollar keeps getting stronger, back close to 106, and this is something we'll have to watch, as it will be a headwind on the multinational companies and commodity prices also. This will be another asset that really reacts to the Fed. Recall that in the past, a bit over a year ago, this was all about the question of who will be most vigilant on inflation. That's what's moving the dollar now. Stocks did gap lower on Friday with the options expiration on tap. The eco data was looked at as hawkish. Then the consumer sentiment came in weaker, and add that to lower inflation expectations, all from the University of Michigan survey, but that was not enough to stabilize the market. Big tech and semis led the way down after Taiwan Semi reportedly delayed some incoming shipments from suppliers, which did make everyone scratch their head or pull the sell trigger, as they seem to be the ones that everyone's been ordering from, and orders seem to be so strong all over in that industry. So that was big news. That was a big news item. There's more to come on that. Overall, options expiration added some late selling, and the markets finished lower. The Dow was down a bit over 0.75%. The S&P down 1.25%, and the Nasdaq was down a bit over 1.5%. For the week, I warned you, the Dow was up 0.1%, the S&P down about the same. The Nasdaq was down about 1/3%. Pretty quiet if you just looked at those final numbers. This week, I'll call it the week of the conference calls. Really two that I think you should be watching. Yes, we got some housing news today, and we'll get some more tomorrow. But as much as this has spent time in the spotlight in the past years, and it is an issue we're watching, that is not the loudest voice by far. The Fed has a 2-day meeting, Tuesday and Wednesday, and all bets are that they will do nothing, a pause. Anything but that will shock the market, and that is not what they want to do. Conference call is the first one that I think is the key. We have to see what Jay Powell and the committee is thinking, and as much as I will continue to tell you that this is not the main driver over the longer term, this week most of the oxygen will be consumed by monetary policy and that discussion. November meetings is the big question, so we'll have to see what they say about that. And as the meeting ends, the Fed heads cannot wait to get back on the speaking circuit. The blackout period is done, and we'll get Cook and Daly before the end of the week. The other main conference call that I think we need to listen to is that of FedEx. They will be releasing earnings and have a call on Wednesday. There are a good number of companies that seem to be a good barometer of what's going on out there, and this is one of them. Like UPS, they deliver so much of the economic activity in the United States, so we'll have to see what they have to add. There will be some additional eco data, and that will only matter if the Fed conference call points to them, which is not likely. We will have to watch some of the inputs to their math. Oil prices still relatively high, used car prices not coming down, labor and jobs, yes, the UAW, 36% increase requested, and a 4-day work week for being paid for 5. I'm not taking sides here. For the news side, note that the counter proposals are already at 20+%, so labor costs are still an issue. Just to put the fine point on shorter term directions, the case for higher markets have rested on a few pillars. 1, soft landing, 2, disinflation, and 3, the Fed being done. All of these are pretty much in place, but a case can be made that they are all in jeopardy, or at least maybe as we go into 2024. We'll watch this and I'll keep you posted on how these look. Overall, the market could not hold on to the gains last week. I maintain that the valuation will make a difference. We finally have seen that in some of the individual names. Any price is no longer a good price target for some stocks. And as I pointed out, what price targets go up by 60 to 100% at a time, you need to, when they do that, you need to wonder. For now, let's keep an eye on things and stay in touch. Friday will be a new planning video with some more ideas. Next Monday is Yom Kippur, so the market update will be on Tuesday. Stay focused on the long-term goals and well-versed in the short-term news if that's what you want to do. I work to do both and look forward to keeping in touch with you about the long-term goal focus and how we strive to get there regardless of the market environment. Last item, as we see October in our sights, please start to get ready for the required minimum distribution conversations if that applies to you. Rebecca and I will be in touch about those soon. For now, have a great week. Check back on Friday for the planning video and Tuesday for the market update.